So this is one of the last things that we want to put together for you in the College Pre-Approval Know Before You Go video resource library. And it's really about bringing it all together and looking at your personal resources. So we're looking at income, assets, loans, gifting strategies. How do you bring it all together to make sure that you're utilizing everything that's at your disposal to save on the cost of college? Well, there's a couple things that we do, and as you may have seen in prior videos, is that we use a 3-step process to really work through this. And that number 1 step, again, is estimate your net cost. Know what kind of financial aid you can anticipate, both from a need-based side and a merit-based side. The next step is you gotta tally up all of your personal resources. So if you look at this worksheet that we work with inside of our workshops, it's a very good way to look at all the different resources that you may use as it relates to college. So if you have savings that are built up, if you're gonna plan on using cash flow, are you okay with your student working while they're in school, and will that contribute to the cost of education? Will grandparents help? Is there any type of family help? And with family help, what I encourage people to do is quantify what help means, because grandparents a lot of times aren't as up to speed on what college costs these days. So make sure to quantify that as you're getting closer to college as to what they can actually contribute. And then the last piece that has now become just a part of the equation for 70+% of the people that are going to college is student loans. So I want to spend a little time and just go through the different types of loans that are available and some of the pluses and minuses of those. The primary program that we have out there now is called the Federal Direct Loan Program. And there's a couple of different pieces inside of the Direct Loan Program, and I focused this part of the session just on those available for undergrads. There are different programs as well for graduate students. But if you look at the main program, one of the primary programs I should say that is out there, it's called the Federal Stafford Loan. And the Stafford Loan is eligible for up to 5 years of your undergraduate education. And the way that that works is, it currently has an interest rate of 4.29%. But that interest rate does change from year to year, so you want to be aware of what that interest rate is going forward. With that student loan, the way it works is they'll give you $5,500 your freshman year, $6,500 your sophomore year, and then $7,500 junior, $7,500 for a senior. For a total of $27,000 you can take out in Stafford loans over the course of your 4-year education. Now, a key point inside of there as well is that there are 2 pieces of the Stafford loan. One is what they call a subsidized Stafford loan. And essentially what that means is that you've qualified for a need-based loan in your name, in the student's name, and no interest will accrue on that loan until you're done with college. So the other one is an unsubsidized Stafford, and with that one, it's the same interest rate, however the interest does begin to accrue while you're in college. Neither of them are required to make a payment until you're done with college. So that's the Federal Stafford loan. The next loan that's out there for those that do qualify on a need base is what's called the Perkins loan. And that is a very good loan, and it has a set interest rate. It's been 5% for a long time. But that is really reserved for those that have the most financial need. But it is a very good loan if you're eligible for it and you need loans. One program that's out there as well is actually for parents. There's what's called the Parent Plus loan. And the Parent Plus loan has actually, in my mind, created some problems, because what it allows you to do is take out the entire cost of attendance in the form of a parent loan. And what parents oftentimes don't know is that is a non-transferable loan. So if you sign up for that loan, you're committed to that and making the entire repayments. Now the interest rate on it isn't bad. It's currently 6.84%. It's going to be here in the fall. But again, it's borrowed by the parents, and you need to be cautious of that. One of the worst stories that I've heard is a gentleman that came to me and said, I've got $120,000 of student loan debt for my son that just graduated from an undergraduate program. He now has a mortgage of $120,000 essentially, and he's 55 years old and he'd like to retire someday. So be cautious and make sure that you know how you're going to pay for all 4 years of college, and know what your student loan amount is going to be before you actually commit to it. And again, what we encourage people to think about is never take out more in student loans than you anticipate making in the first year out in that career. The last piece I want to talk about that I actually see more people getting in trouble with is the private student loan market. Private student loans have become a problem because if you look at what the Stafford loans allow you to take out, it's only $27,000. Now, that's a pretty big number. But with private loans, that's where people get into trouble and take out $60,000, $70,000, $80,000, $90,000 of student loans. It's with private loans. Private loans are there, and they are directly with the bank. And now these days, what they often require is a cosigner. So mom and dad, you need to have that conversation early on if you're going to be willing to co-sign for a private student loan for your student, because that may be one of the ways that you fill the gap. But I just caution you to make sure that you're using our metric of not taking out more than you're going to make in that first year, because private loans is really where things get out of control. There's no income-based repayments. There's no additional programs where you can defer payments. It's a private loan with a bank, and they're going to expect repayment as soon as you're able to make it. So be cautious with how much you may take out in those private student loans. So hopefully these are some good resources to help you know before you go how to put it all together and create a comprehensive 4-year college funding plan.